Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar, an immediate countering bullish harami on Friday after the previous session's key reversal down, if only just. The market remained capped by the overhead April 2020 low at 107.25 and supported below by the combination of the now flatlining short-medium moving average, currently 106.35, as well as the 2020 low at 106.36 and congestion at 106.13. Meanwhile, further overhead, we have the May 2020 low at 107.66, and then the fleeting combination of the upper bull channel line, currently at 107.91, which is highlighted in green, of the recent October-based bull channel, plus some pretty heavy-duty resistance from the medium moving average, currently 107.90, and the long moving average, currently 108.01. The latter two have just formed last week a dead cross. Overall, we are still within the previously mentioned October-based bull channel, currently 105.79 to 107.91, which in turn is a breakout from the earlier mid-July to late October bear channel that's highlighted in bright red on my daily chart. As a result of this breakout, I had previously laid up some potential topside targets for such a bear channel pattern. Thus, you had a primary target in the 107.10 area with a secondary target X1 in the 108.05 area. 2 weeks ago, we saw the primary target 107.10 reached and exceeded. The secondary target X1 is still live at 108.05, but as I said earlier, there's a lot of resistance nearby from the medium and long moving averages. So far today, a small move higher, but still not really near to the April 2020 low at 107.25. Cable, aka sterling against the US dollar. A lower but indecisive doji cross on Friday, as the still unusual support of the slowly rising short moving average, currently 122.06, kicked in to support the market. Overhead, the June 2020 low at 122.48 capped the market. Beyond that, we have the declining short medium moving average, currently 122.88, entering the frame. The market is still in the middle of the recent trading range we've seen here since mid-September between the overhead 50% Fibonacci line of the June 2021 to September 22 move at 123.16 and below the May low at 120.73. The break up higher late 2 weeks ago and at the start of last week is now most definitely a false break higher, and the whole idea of a late September, early November possible double bottom pattern, Adam and Eve type, is verging on a false idea and may soon be retired. This will include the primary target X for such a pattern in the 124.85 area and a secondary hard to reach target X2 in the 125.60 area. Unless the short medium moving average is tackled and neutralized, there will be no further choice but to retire this whole idea. This is now an important question for this market. Now, so far today, a slightly lower open and a move up to test the next resistance of the June 2020 low. Euro sterling. A fifth bullish white soldier on Friday that ended up with the highest high as well as the highest close since early May. Additionally, and this is important, it was an immediate countering weekly key reversal up last week, offsetting the previous week's weekly key reversal down. Overall, the market has now moved up to test the middle time, currently at 87.56, highlighted in bright red on my daily chart, of the late August to early October bullish Andrews pitchfork, as well as towards, actually that's actually a bullish shift pitchfork, that one. It's not a bullish Andrews, my apologies. As well as towards the upper end of the late September, early October based bull channel. That's currently 86.57 to 87.72, which is highlighted in purple on my daily chart. Below, we have the significant congestion of the April 2021 high at 87.19, plus the interesting rising short moving average, currently 87.09, and the lower time, currently 86.91 of the bullish shift pitchfork, with a slowly declining long moving average at 86.84 nearby. I'm still wondering if my recent decision to retire the potential topside targets for the June to September roof pattern with a harder to reach secondary target up in the 88.18 area, whether its retirement was a little premature. Now, so far today, a higher open, the highest since early May, but then a drop down as the market seems wary of testing the middle time overhead, thus creating today's action into a possible bearish dark cloud cover pattern and maybe eventually even a possible bearish engulfing pattern. US dollar against the Indian rupee. A big piece of action on Friday with a big move up on the upside, punching up through August highs at 83.44 to make a new all-time high. It was seen to be a suitable follow-on to the previous session's combined bullish open and close white Mariposa and bullish engulfing pattern, the second highest close ever, only surpassed by the previous session's close. However, and it is an important however, the action itself was an indecisive spinning top. Plus, it could be seen as a possible day two in a descending hawk pattern, a pattern traditionally seen as a bearish reversal. On a more strategic note, it was a second consecutive close over the extension to the downtrend of the late July to late October ascending triangle pattern, currently 83.19, and it's highlighted in dark blue in my daily chart. Now, I'd previously laid out potential targets below for the recent break below the ascending triangle pattern. Hence, a primary target X would be in the 82.45 zone with a secondary harder to reach target X1 in the 81.45 zone. I am now considering retiring them, though I am still minded to once again caution you on the possibility of false breaks here in either direction just in case. So far today, a lower open just above the October 2022 high at 83.27, a small dip below, but then a recovery to just over Friday's close and looking like an indecisive doji cross right now. US dollar against the Brazilian real. A bearish closing black Mariposa and bearish double on Friday as the market had second thoughts about challenging the overhead combination of the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61, the upper purple highlighted trend line extension to the August to September rectangle pattern currently at 497.59, the declining long moving average currently 498.49, and a flatlining short medium moving average currently 498.68. There was enough of an aversion for prices to punch down and close below the rising medium moving average, currently 492.57, and the previously broken upper time, currently at 490.93, of the July to September bearish shift pitch, although not as far as the 2021 low at 489.08. Further down, we have the 50% Fibonacci line of the June 2019 to May 2020 move of 484.26, plus the nearby lower purple highlighted trendline extension to the same August to September rectangle pattern that's currently at 483.47. Overall, this continues to be a further continuation lower after the weekly key reversal down 2 weeks ago, towards the lower end of the breach, but ultimately still valid November 2022 to date bear channel, and that's currently 468.98 to 514.72, and that's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line capping the market in early October. US dollar against the Mexican peso. A bearish dark cloud cover pattern on Friday that was a reactionary move after the previous session's bullish white Mariposa. Prices were interestingly capped by the declining short moving average, currently 17.88.58, though there was a better combined resistance overhead from the purple highlighted neckline, currently 19.94, of the January to May 2021 head and shoulders top, and the red highlighted neckline of the more recent July to October reverse head and shoulders continuation bottom at 18.22.56. The only thing I could think of was that perhaps the market took early fright at testing these two. However, the fall of the market was stopped by the combination below the declining long moving average, currently 17.64.71, and the rising short medium moving average, currently 17.65.24, closing below both of them, just but ahead of the next support, and that's the recently significant August 2017 low at 17.56.93. Further down, we have the July 2017 low at 17.43.62, then the slowly rising medium moving average, currently 17.33.58, which is just ahead of a combination of the broken upper bear channel line, currently at 17.16.95, highlighted in dark blue on my daily chart, and the unusual neckline of the February to April head and shoulders top, currently at 17.19.29. Now, overall, the recent actions have been a more than suitable continuation from the break below the mid-September to date lower bull channel line, as well as below the late September to date ascending triangle. So this leaves us with targets below, further down, for the break below the ascending triangle pattern. Now, for such a pattern, we had a primary target in the 1767.05 zone below, and a hard to reach secondary target X1 down in the 1704.90 zone below. The primary target, well, that was reached 2 weeks ago. On top of this, we had a double top for the action since late September to early November. And for such a pattern, there was a primary target in the 1736.45 zone and a secondary harder to reach target X4 down in the 1703.70 zone below. The primary target was also reached 3 weeks ago. Now, so far today, well, not much. Indecision either side of last Friday's close at the moment.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.